Good morning, everybody. It's Monday, January 13th, 5:25 a.m. Central Time. Grain markets are higher across the board this morning. March corn futures up 4 cents at 474 and a half. March soybeans up 10 and a quarter at 1035 and a half. March Chicago wheat up 8 and a quarter at 539. March Kansas City wheat up 7 at 558 and three quarters. March spring wheat up 5.5 at 589 and three quarters. We had an absolute blockbuster of a USDA report out on Friday. Let's start there.
So corn futures rallied sharply on Friday following bullish data from the USDA. The nearby March 25 corn contract gained more than 14 cents per bushel and posted its best trade since June 20th. USDA reduced its estimate of the 2024 U.S. corn crop by a whopping 267 million bushels. USDA's estimate of last year's U.S. national corn yield was cut by 3.8 bushels per acre, which ties 2020 for the largest November to January cut on record. USDA's estimate of the 24-25 U.S. corn ending stocks was cut to 1.54 billion bushels from 1.74 billion previously.
So big yield cut in corn. This was probably the biggest news out of the report. And this is, of course, the 2024 crop. The timing of this is less than ideal for some farmers out there. Carrying corn, physical corn, storing it, whether it's on farm, off the farm, whatever, it's more expensive these days than it used to be. So a lot of farmers did not want to put corn in the bin. They didn't want to pay storage. Interest rates are high, which makes it restrictive. So it would have been nice to have these numbers, 3 or 4 months ago. But here we are. The market looks good. Best trade since mid-June in the March corn contract. Even new crop futures perked up a little bit. We've got the DC25 corn contract above 450 early this morning. So a very positive reaction. Fund traders reported to be very active on Friday. Private groups estimate that the funds were net buyers of 60,000 contracts of corn, which puts them estimated at a net long of 280,000 contracts, which is bordering on extreme. Super interesting. So your corn crop is not 15.1 billion anymore for last year. It's 14.86. So that's a sharp downward revision. When you look at ending stocks, it's not a 2 billion bushel ending stock situation anymore. It's not a 1.7. It's not a 1.6. It's a 1.54 billion bushel carry out for corn in the United States. And this is what USDA projects will be left over on August 31st of this year. So that number could change. You could see reduced demand. A lot of different things could happen, but it's definitely a friendlier type situation here. Let's look at ending stocks to use ratio. This is the best way to gauge supply and demand. It's much more accurate than just ending stocks. 10.2% is the new U.S. corn ending stocks to use ratio projection. And 10.2% is not nearly as burdensome as the bear markets that we saw from 2014 through 2019. It's not quite as bullish as what we saw in the bull markets of 21 and 22. It's probably somewhere in the middle. And prices are kind of somewhere in the middle with spot futures here at 474 this morning. We're not in the, $3 to 420 range that we saw in that bear market period from 14 through 19, but we're not in the $6 to $7 neighborhood or even $8 neighborhood that we saw in 21 or 22. We're somewhere in the middle, which kind of makes sense, I think, given the statistics and what I'm seeing here. Now, this could be back and forth in a very wide range, and maybe the rally is sharp enough here that farmer selling just comes out of the woodwork and caps this thing. The one thing that I would point to that could be an anchor on this would be the soybean situation and then the corn acreage situation for 2025. We're going to plant a lot of corn acres this spring the way that it looks. But I'll tell you what, the old crop situation looks quite a bit more friendly and let's say less bearish than it did just a few days ago. Let's jump to soybeans.
So soybean futures also rallied. The nearby March 25 contract gained more than 26 cents per bushel and posted its best trade in nearly 2 months. USDA reduced its estimate of the 2024 U.S. crop by 95 million bushels. USDA's estimate of last year's U.S. national soybean yield was cut by 1 bushel per acre, the largest November to January cut on record. USDA's estimate of the 24-25 U.S. soybean ending stocks was cut to 380 million bushels from 470 million previously.
So despite all of the bearish global supply and demand news, record Brazilian crop, record world ending stocks, the bean market has been able to rally sharply because of what USDA told us on Friday largely. So the bean yield was cut by 1 bushel per acre, and that's the largest November to January cut on record. They don't adjust yield in December, so it's Nov to Jan, and that's a sizable cut. It takes your carryout situation in soybeans for the United States down to 380 million bushels from 470 previously, which is not nearly as bearish. The world situation, I think, is still problematic. You've still got record high global ending stocks projected, despite the U.S. production cut 128 million metric tons. That's down from like a 132 last month. So not quite as burdensome, but I think that exceeds this global ending stocks projection. I think it exceeds the previous record by like 12%. So you've still got globally a bearish situation with regard to soybeans. And to fast forward just a week now, Trump's going to get into office. What happens with tariffs? Is the market still concerned about tariffs? If you look at the position of large money managers, they don't seem overly concerned. They're like barely short the soybean market in real time if the private groups are anywhere close to reality. So definitely some positive news from USDA. I know a lot of people are going to criticize USDA on this and say, where were these numbers 3 or 4 months ago? They would have really helped us out. Better late than never, I guess. USDA has a very, very difficult job, as our friend Matt Bennett has said in our premium stuff several times. Most farmers would have a very tough time predicting their own yield within 4 or 5% in a given year. USDA has the task of trying to estimate the national yield. And yeah, they're going to be off by sometimes several bushels per acre. And that's what we found here. I'm not trying to be a USDA sympathizer or anything. I'm just telling you that they've got a difficult job. We had some biofuels news out on Friday also.
We sure did. The Biden administration announced updated 45Z tax credit guidance. The guidance prohibits imports of used cooking oil for biofuel production from qualifying for the tax credit under the GREET model. In response, March soybean oil futures gained 7% on Friday, rising to their highest level since June 2023. The updated guidance follows a recent surge of cheaper used cooking oil imports from China, which undercut domestically produced soybean oil. While the guidance offers more clarity on the tax credit, several U.S. biofuel and agricultural groups criticized it for not providing enough details about what qualifies. The guidance allows used cooking oil sourced from the U.S. to qualify for the 45Z tax credit.
There's a lot of details that I could get into here. I'll tell you what I think you need to know. What you need to know is that this is essentially the Biden administration kicking this to the Trump administration for the most part. Now, I asked Pete about this, and Pete seems to think, and the market seems to think this also, that we should respect the language regarding used cooking oil, that they're going to eliminate used cooking oil imports as a feedstock that qualifies for these tax credits. And that makes total sense. That lines up with Trump's MO of being, pro-US. Let's stop importing and supporting China and places like that. So that makes sense to me, but we're still waiting. We're still waiting on what the Trump administration is going to do with this. And there's a lot of different ways you could think about that. On one hand, Trump wants to very much peel back a lot of the climate stuff, a lot of the Inflation Reduction Act type stuff associated with climate. But at the same time, you would think that Trump would be very much anti-imported used cooking oil. So a lot remains to be seen there.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos from last week?
Report day is a good day to be a premium subscriber. I had a USDA snapshot video sent out within 10 minutes of the report. Gave you kind of the high level items. Is it bullish or is it bearish? What's the big number? What was the big surprise? I did a 2025 or new crop corn marketing thoughts and strategies video. Talked about that on Tuesday. I did the same thing for soybeans on Thursday. And the new crop soybean situation is very difficult. I called it mission impossible from a grain marketing standpoint. It's just, you can't make money with beans at these prices. So what's the strategy? What are my thoughts? That's what I laid out on Thursday. Pete Meyer is going to be on today. We're going to talk about the report. We're going to talk about 45Z. We're going to talk about some of the biofuel news that's been out. If you guys want to check out the premium deal, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. If you're seeking a simpler approach to your grain marketing in 2025, this is a great place to start. I offer cash grain marketing recommendations that are very, very easy to follow. They're tracked every single day at the bottom of the email. If anything changes, you're alerted via text and via email. I think you guys would benefit from an unbiased third party and maybe some different ideas with regard to marketing. Give that deal a shot today, guys.
Conflicting projections for Brazil's soybean crop have been reported. On Friday, Patria Agronegocios revised its projection downward to 167.9 million metric tons, a reduction from its December estimate of 170.4 million metric tons. The reduction was attributed to unfavorable weather conditions adversely affecting crop yields in some states. Meanwhile, Safras and Mersado raised its forecast to 173.7 million metric tons, up from its previous estimate of 171.8 million metric tons. The consulting group acknowledged the weather issues that could lead to lower yields. However, the group said that excellent yield potential in Mato Grosso could make up for production losses.
So one of the groups said that there's crop quality issues in some of the southern areas. The other group said that, yeah, that's maybe true, but the good crops in Mato Grosso and further north are going to offset that. Looking at Brazilian weather this morning, remember this, there's already some early harvest going on in northern Brazil, and it's going to work its way south, of course, over the course of several weeks. Southern Brazil is still going to be drier than normal. Rio Grande do Sul in particular is going to be dry, but all in all, it looks to me like this Brazilian crop is going to be a 170 or something very close to it, maybe above that, depending on just how good the crops in the north are. Looking at some other weather this morning, really your weather problem, if there had been one, had been southern Brazil and then parts of northern and northeast Argentina. And it would appear, based on the forecast this morning, that the rains are going to come back by Friday this week. And then during that 10 to 16 day period, you're really going to see some better coverage. The further out you go with the forecast, I understand it becomes a little bit less reliable, but it looks like we could avoid a disaster here. It's early enough. If they catch the rains here next week or 2 weeks from now, I think they'll be okay in these areas of Argentina and southern Brazil. Argentina is still going to be below normal with regard to rainfall. This is a great map from our friends at Crop Profit. On average, over the next 14 days, Argentina soybean areas will see 72% of their normal rainfall. So not a disaster, but still drier than normal. It's early there, though.
Crude oil prices surged on Friday in response to U.S. sanctions targeting the Russian oil industry. WTI crude rose 3.6% to settle at $76.57 per barrel, its highest level since October. The sanctions target Russian oil companies, more than 180 tankers, and Russian energy officials and executives. Russia's oil industry has been a key source of revenue to fund its war against Ukraine. It's expected that the sanctions will cause Indian and Chinese refiners to turn to the Middle East for additional oil supplies. The move coincides with President Joe Biden's decision to send more aid to Ukraine to support its efforts in the ongoing conflict.
Crude oil market has really picked up and perked up. Just so far this calendar year, 2025 year to date, crude's up $6 a barrel, or about 8.5%. That's a fairly sizable rally. Now, to really get something going with regard to the charts and technicals, I think you need to see a trade above that, say 85, 90 neighborhood, and things would start to look a little bit more friendly. Look at the Bloomberg Commodity Index. This thing was up 4% just last week. So is there some just underlying interest in commodities all of a sudden? Maybe there's a fear of a reinflation event. I think it's very much a possibility. Some of these Trump policies are inflationary. We talked about, I think last week, how the inflation of the 70s and 80s, it never went straight up and straight back down. It was kind of a yo-yo. It took several attempts at trying to tame inflation to ultimately get it under control. I'll tell you what, if this Bloomberg index, the commodity index, it's trading near 103 this morning, you get this thing up above that, like 107 neighborhood, and there could be, just generally speaking, kind of a run toward commodities. And that would be very much a good thing for the corn market, soybean market, wheat market. You could see some buying despite some of the bearish fundamentals associated with some of those markets. You could see some fun buying and outside money interested in commodities again if there's a reinflation event that is perceived.
U.S. export sales were disappointing once again last week. Net corn sales fell below pre-report expectations and notched a marketing year low at 18 million bushels. The print was down 43% compared to the previous week and down 61% from the prior 4-week average. Colombia was the largest corn buyer for the week. Net soybean sales also fell below pre-report expectations and declined to a marketing year low at 11 million bushels. The print was down 40% from the previous week and down 72% from the prior 4-week average. The Netherlands were the largest soybean buyer for the week. Net wheat sales also notched a marketing year low and were below expectations at 4 million bushels. The print was down 21% from the previous week and down 70% from the prior 4-week average. South Korea was the largest wheat buyer for the week.
The sales look terrible, but it's the weekend in January 2nd. So this was a holiday week. And that's what I would chalk this up to. We should be back to more normalized export sales reporting next week. What did cattle do on Friday?
Cattle futures were higher once again. Live cattle were 27 cents to $1.37 higher. Feeders saw gains ranging from 75 cents to 117 higher. Cash cattle trade was on fire once again last week. Down in the Southern Plains, cattle were $4 higher at $2 to 201. Up here in Nebraska, cattle were $3 higher at 203. And then over in the Western Corn Belt, cattle were steady to $5 higher at $2 to 203. Box beef was higher on Friday. Choice was up 206 at 332.84, and Select was 579 higher at 314.14.
So those are record high cash cattle prices in a lot of those
correct.
places.
Yep,
and
sure.
what is the underlying issue supporting record cash cattle prices?
Fundamentals. The cattle aren't out there.
And I think people should still be worried about risk to the downside. We've been saying that for a while. It's just the prices are incredibly lofty.
Oh, definitely. And beef demand is keeping things propped up. It's incredible how people are continuing to pay what they are for beef.
Yeah. Outside markets on Monday, U.S. dollars up a little bit. Stocks are off. The S&P's down 46. The Dow's down 120. Bonds are flat. Gold's off $13. Crude oil is up again, up $1.25. And the March WTI at $77 even. Have a great week, guys. We'll be back on Tuesday.